When people ask me about Renko trading, they are often looking for one thing. What's the best brick size? What's the best indicator? What's the best entry signal? Those are all great questions. But over the years, I've found that asking a different question leads to much better results. How do all of those pieces fit together into one complete trading system? That's exactly what I'd like to show you today. I'll walk you through the same 11-step process I use before every trade, from choosing the right market to reviewing completed trades. Whether you're new to Renko charts or you've been using them for years, I hope you'll come away with at least one new idea you can test for yourself. Let's get started. Hi everyone, I'm Carl. Welcome back to the Renko Trading channel. Before we start, this content is for educational and experimental purposes only. It is not financial advice. Always do your own research before making any investment decisions. Step 1. Choose the right market. Let's start with something that many traders overlook. Before worrying about indicators or entries, I first decide what I want to trade. Some markets naturally work better with Renko than others. I generally look for markets with good liquidity, consistent movement, and trends that don't constantly reverse every few minutes. For me, stocks like Apple, major ETFs, and sometimes major forex pairs are great places to begin. If the market itself is difficult to trade, no indicator is going to fix that. Once I have a market selected, I can move to the next step. Step 2. Define your goal. Now I ask myself a simple question. Am I trading or investing? Those are two very different goals. If I'm swing trading, my brick size, exits, and expectations may be very different than if I'm building a long-term investment position. Having a clear objective makes every decision that follows much easier. Step 3. Choose your brick size. This is probably the question I get asked more than any other. What brick size should I use? Unfortunately, there isn't one perfect answer. Some traders prefer fixed brick sizes. Others like ATR-based Renko charts. I actually test both. The important thing is choosing a brick size that matches both the market and your strategy. Too small, and you'll get lots of noise. Too large, and you may react too late. That's why I always backtest before committing to a brick size. Step 4. Define the trend. Once my chart is built, I need a consistent way to define the trend. That might be trend lines, moving averages, the super trend indicator, or another method. The specific tool matters less than having clear, repeatable rules. If I can't explain exactly why I believe the trend is bullish or bearish, I probably shouldn't be taking the trade. Step 5. Build entry rules. Now we can finally talk about entries. Notice we're already halfway through the process. That's intentional. Entries are important, but they're only one part of the system. For example, I might wait for a breakout, a pullback, or confirmation after a trend change. Whatever the rule is, it needs to be simple enough that I can follow it consistently. Step 6. Plan your stop loss. Before I ever enter a trade, I already know where I'll exit if I'm wrong. That removes a lot of emotion. Instead of making decisions while the trade is moving against me, I've already decided what I'll do before entering. Step 7. Build exit rules. Getting into a trade is only half the battle. Knowing when to leave is just as important. Sometimes I use trend reversals. Sometimes moving averages. Sometimes a profit target. The specific method isn't as important as having an exit plan before emotions take over. Step 8. Manage your risk. Even a great strategy can fail if position sizing is poor. I never want one bad trade, or even one bad week, to erase months of progress. Risk management isn't the most exciting topic, but it's one of the biggest reasons traders survive long enough to become consistently profitable. Step 9. Backtest everything. This is where confidence comes from. Not guessing. Testing. TradingView makes it easy to compare ideas over years of historical data. Some strategies look amazing after 10 trades. Then they completely fall apart after 1,000. Backtesting helps reveal the difference. Step 10. Use a checklist. Before every trade, I like using a simple checklist. Did I choose the right market? Is the trend clear? Is my brick size appropriate? Do I know my stop loss? Do I know my exit? That simple habit slows me down and helps reduce emotional decisions. I also created a free printable version of this checklist. If you'd like a copy, you'll find a link in the description below. Step 11. Review every trade. This is probably the most overlooked step. Every completed trade teaches me something. Maybe I followed my rules perfectly. Maybe I broke one. Either way, I write it down. The goal isn't perfection. The goal is continuous improvement. Let's quickly review the entire process. First, choose the right market. Second, decide whether you're trading or investing. Third, select the appropriate brick size. Fourth, define the trend. Fifth, create clear entry rules. Sixth, plan your stop loss. Seventh, build your exit strategy. Eighth, manage your risk. Ninth, backtest everything. 10th, use a checklist before every trade. And finally, review your completed trades so you can continue improving. When all of those pieces work together, you have something much more valuable than a collection of indicators. You have a complete Renko trading system. If there's one idea I'd like you to take away from this video, it's this. Successful Renko trading isn't about finding one magical indicator or one perfect setting. It's about building a repeatable process that helps you make better decisions over time. As you gain experience, you'll refine each part of that process, but having a framework gives you a solid foundation to build on. If you'd like to dive deeper, I've written a companion article that expands on each of these 11 steps, and you can also download my free printable Renko trading checklist. You will find links to both in the description below. If you found this video helpful, please give it a thumbs up and consider subscribing to the Renko Trading channel. It really helps the channel grow and lets me know you'd like to see more educational Renko content. That's a wrap on today's breakdown. Thanks so much for watching. If you found this helpful, give it a like and hit subscribe for more Renko trading insights. Don't forget the bell icon, and I'll see you in the next one.